All right, good morning, folks. Tim Davis coming to you guys with another early morning market video. Today is April the 19th, 2023. Time is now 5 a.m. And I wanted to do another video. I did one last night showing you guys the movement of the VIX. And let me try to put it all, look at the totality of the circumstances and show you guys what's happening, putting it all together. All right, I think there's a reversal. Reversal signs are starting to pop up. Reversal signs are starting to pop up. Remember, I told you guys we're still in the bear market. Okay, we've just been experiencing a strong rally within that bear market. So along the way, the bulls have been, very ecstatic, looking at signs that the market could be turning from a bearish market to a bullish market because of the strong rally that we have seen in October 2022. So in October 2022, we saw VIX hit a tipping point right about here. So you notice that lines up with October. And the VIX started to trend downward. In addition to that, you can see the well-defined downtrend below the 20-period moving average. Well-defined downtrend below the 20-period moving average. Hold on one second, folks. Okay. There we go. All right, so well-defined downward trending pattern below the 20-period moving average since October, and which was giving the markets a big boost. And then we started to see something happening around February of 2023. Notice the VIX really started to try to recover just a bit, found a strong level of support that's been in place. So this dash line you see I have on the bottom, that strong level of support has been in place since the beginning of 2022. Look at the left side of my screen, you see where we got a strong bounce from that level. Beginning of 2022, January 2022, we got a strong bounce from the level. So the VIX started to try to find support around a level. Started to base around a level around January of this year. Got a little bounce, kind of direction. So there was no confirmation, no huge confirmation. We got rejection back to that same support level around March, and we got a huge bounce. This is probably just a temporary signal that the VIX probably wants to rise. Then it came back down hard from March until April. And now look where we're at now. All the way back down, just a tick lower than where we were in 2022. Now, mind you, we're in a bear market. So just a tick lower in 2022. I think that was just pretty much just a way to try to convince the bulls overall that's bullish in this overall market. Everything is good. Out of this bear market, the VIX is dropping much lower. Only to find a way for institutionals. It's been a lot of money sloshing around, and I believe that a lot of institutions, major institutions, were just waiting for this type of action. A lot were standing on the sidelines. A lot were because the volumes in the world markets have not been great, with the market going up. So that's a signal that possibly a lot of institutional money on the sidelines or in other vehicles, knowing that something's about to happen, while all the bullish folks, probably a lot of retail traders and other folks, just piling in. So look at what's happening now. It's like we're starting to get this bounce on the VIX, almost the same right that we got the bounce in 2022 with the VIX in oversold territory. That was key. VIX has been in extreme oversold territory. If you look at the full stochastics, Williams percentage, CCI, been extreme oversold territory, and we even dipped even lower in oversold territory in the CCI. And now we're starting to see a reversal sign there. Look at what happened. We got extremely oversold, created a lower low in the full stochastics oscillators, and then boom, we're starting to get a big bounce. And the full stochastic oscillators starting to get a big bounce in Williams percentage oscillators, and all are bouncing out of oversold territory, right? Pre-market, before the market even opens. Go on to features. and full stochastics with popping out of oversold territory. And then you look very closely. Said we will probably soon get a big bounce out of this VIX away from this level, because this was an extreme level that we see in 2022, and we got a big bounce in a bear market. So more than likely, we're going to see the same type of things start to happen. So now, the ultimate key is, are there any other signs that are showing us that we could be in for a sustainable pullback in the market and could see a major rise in the VIX? There are some other signs, and I'm going to point those out. So now we got to see how this continues throughout this week. But looks like the VIX is trying to really stage a comeback. Look at that big gap up. Okay. Now, one thing I will point out is that 9 times out of 10, when there's gaps in the VIX, they normally always fill, but they don't have to fill right away. There was one gap up that we seen back in 2020 when we seen a big COVID debacle, COVID crash, caused the markets to pull back. There was a big gap up in the VIX, and folks, it took a year for that gap up in a daily chart to fill. So keep that in mind. Even though we got a gap up in the VIX, could it fill right away, or could it take a while? We've been in a strong downward trend in the VIX over the past month, so it could take a while. We got to see. VIX is coming up to this 20 moving average rather quickly. The VIX futures is, but that could just be a setup for a major move higher above that level. So keep that in mind. The VIX is definitely starting to show. VIX futures are definitely starting to show a big move now. And again, that move signifies a bounce from the level that we're seeing over a year ago, back in the beginning of 2022. So almost like a double bottom. Okay. That is a stronger sign that we could continue higher than all the rest of this noise here. There's a big gap up, and we could definitely see higher prices now in the VIX. Now let's take a look at the dollar. Also another sign that this could be confirmation that the markets are about to start to trend lower. Now, as the dollar index trends higher, normally the markets start to reverse, as well as the VIX trending higher. So that's another sign. So look at this setup. Look how the dollar index also did the same thing at the beginning of March. You see the dollar index just hit a what looks like a topping pattern, reversal pattern there, and we started to see this extreme sell-off. But look what's happening. It sold off around about March 20th, and then so you got a lot of more solid candles here. It's a lot of indecision here. So that was telling me that the that the dollar index was probably just looking for a strong support level to bounce from and establish. All this is a lot of indecision. So that tells me that the dollar was just waiting and patiently waiting for a reversal, and this probably was the reversal pattern. What's the reversal signal? The true reversal signal that popped up around the 17th, close to the 17th of April. And look what happened since then. Dollars came back up, based around a little bit, and look at this candle that's forming now. First solid candle we've seen is starting to form this daily chart since we've seen this big solid red one back in March 20th. Starting to get a solid green candle right at a level of decision, right around a 20 moving average. And to me, this looks like this whole pattern here looks like a double bottom. So from here, here to here looks like a double bottom, which could be signaling a bigger move higher for the dollar index. That's also another sign that the overall markets could start to see reversal. So now we got the VIX showing signs of a reversal to the upside. We have the dollar showing signs of reversal to the upside. Now let's take a look at the major averages by looking at the futures market of the Dow Jones. And voila, the monthly chart. Look very close. And I told you guys this has been pretty much a nothing burger for quite some time. We've been in this tight range And then this range area, I'm gonna get a little bit tighter here in a second, but I want to point this out in the shaded area for quite some time with the market's not really doing a whole bunch of anything. Okay, we've been in this pattern since about November and the Dow Jones futures. Now, let's blow this up just a little bit and get a little closer and show you guys what the pattern is starting to show. And I'm gonna start from indicators and work my way up. All right, look at the full stochastic. I'm sorry, the CCI, folks. CCI actually started to show signs that we were possibly ready to head lower back in the beginning of April. Okay, so CCI started to diverge. So the huge divergence from price action right then when we got this bearish crossover back in beginning of April. Then we started CCI start to see lower highs. See the CCI. So get the a little bit more. So CCI here reached a high point here back around beginning of April. Since then, it's been trending lower. It's been trending lower, 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 lower. But price has been going up, 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 and away. That's a divergence, folks. Call it a bearish divergence within the bearish market. So it was just a matter of time before price started to show signs that it was ready to go along with this divergence. All right, so now we see very tight action here as we're starting to see CCI even go lower. Starting to see a bearish crossover there. We're starting to trend lower. Look at the awareness percentage. It's out of oversold territory. Out of overbought territory now. It's starting to hinge lower. And full stochastics like it's ready to follow suit. All right. Now look at price. This is what really has my attention. This formation here. Several indecision candles, multiple days in a row. And then all of a sudden, we are now seeing another candle starting to form right now before the market opens. And that is not an indecision candle right now. It's a solid candle. Still have the whole day to go. But that is a solid candle. Considering we have been around this level, not really going higher. We've been stuck at this big green candle. We've been stuck. It's pretty much Sowie's pattern. Have we been stuck in this formation before, in this pattern before? Yes, look over here. January. We got up around this area and we just came stuck. Every time we get to the close to the top of this shaded area, we get stuck. And we find a way to pull back. Up here was immediate reversal after getting stuck, after I'm pulling up to the top of this, close to the top of the range. So we get clustered and then we pull back out of this range. That's what happened in beginning of February. Look what's happening now. We're stuck again, which leads me to believe, after looking at the VIX and the dollar, that this pattern is a topping, possible high topping pattern, and we're about to get stuck and do the same thing that we did here. The question is, how low do we go? And that is a story to be seen just yet. But if you're looking at the VIX, folks, I'm telling you, looking at the VIX, VIX has been at an extreme low, and that's the lowest VIX has been since 2022. So that's a long time frame to get that low. So which leads me to believe that if it took us, over a year to get that low, we could see an extreme reversal back to the upside in the VIX, which means the VIX could be on a path higher for much longer, since we were in a path lower for much longer. So that is just a simple way of looking at how long we could see a VIX move higher. How long did it take for the VIX to drop that low? It took almost over a year in a bear market. So, and it's starting to reverse. So we could be in that reversal pattern for a while in the VIX. All right, so that is what the Dow Jones futures is showing us. Now, take a look at another one. Take a look at the NASDAQ. NASDAQ futures. And look at this one. This one even looks more dire looking at the oscillators in the indexes. I mean, in my indicators. So here is the Dow, the NASDAQ futures. Again, same type of pattern. Been topping out. Hasn't really done a whole bunch. And I pointed this out yesterday in the video. All these candles here, all these represent a day. So this almost, count them up again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days of a big nothing burger. Just up and down, really not developing a trend. This is what I consider a trend, something like this. This is what I consider a trend, something like that. This is what I consider a trend, something like that. We've been in a big nothing burger for all these days, almost 14 days. So like a trend is starting to form. And I believe the trend is to the downside. Look at the, first of all, look at the TTM squeeze. It's going from a sign of strength to a sign of weakness for the overall bulls. And look at the stochastics. It has been trending lower, folks. So we got up to a high point right around here. And look, since then, since the beginning of April, the full stochastics has been, full stochastic has been trending lower. It's a negative sign. Negative sign. Again, that's divergence, because right here we started to trend lower. Price action was still trying to go up, but that's a negative divergence. Look at the Williams percentage. Anything is more well-defined. This is a well-defined rolling over of the oscillators and the Williams percentage. That also started around the beginning of April. And also right with the CCI is also starting. It starting to show a sign of rolling over back in the beginning of April. So all those signs there was giving us fair warning in advance that the price action was diverging from the actual indicators, showing that we're on the path of possibly heading lower. All right, that's the NASDAQ. So definitely see signs of a reversal pattern, and now we are right at the precipice of a major break below the 20-period moving average also. So look how close we are. As of right now, hold on. Look how close we are to a breakdown below that 20-period moving average now. Very, very close, very, very close. So today is going to be a telltale sign. All right. All right, let's glance at the S&P futures real quick. Same thing. And I don't even want to get closer, but I'm going to get closer, but I want to point this out so you can see it from a distance and you can see it close up. Look at the Williams percentage here. Look at how it's just looking like it's just sloping lower. See that? Just ready to nosedive. And look at the CCI. Ready to nosedive. Lower highs and oscillators. And we got this diving pattern. It's like it's ready to nosedive. Of course, the cash like it's ready to nosedive out of overbought territory as well. All right. So that's what it looks like from distance. Now let's get a little closer. Again, back up to an area of resistance where we have been struggling to break above that 4,200 level in a big way. We've been struggling to break above it with all of these indecision candles right here. Indecision candles, where it's no real big body. There's strong wicks, there's long wicks on both sides of the candlestick. Here, it's almost like a doji pattern here. This is almost like a doji pattern, and then almost like some sort of hammer there. So, and then we're starting to see a red candle here this morning today. So does that remain solid red? We have to wait and see how the day plays out. But all signs are pointing to that's a possibility. That is a possibility. Again, look closer, look at the Williams percentage already pulling out of the overbought territory as we've been trending lower here anyway since the beginning of April. Well, stochastic starting to pull out of the overbought territory as well. CCI just about to cross with the sell signal right there. All right, that is a close look up at the S&P. So we took a look at the S&P, Dow Jones, NASDAQ. One more. Look at the Russell. Close look at the Russell. Also, try to come back up in the Williams percentage, but also it did the same. Created a lower high. See that? Lower high there. Lower high in the CCI. a little high in the full stochastic oscillator. So they're all been showing lower highs in the oscillators themselves, and then starting to reverse here. Starting to reverse here. Starting to reverse here. All right. Then if we get a little bit closer, you can see what's happening in the price action. And it's also starting to show signs of a topping tired pattern of the bulls trying to push price higher. Pressing. I mean pressing. The Russell's really been pressing on that 20 per moving average in a big way. Trying to stay above it. It looks like it is on the precipice of breaking. So we have to see how this pans out the rest of this week. Okay, folks, that's all I wanted to point out. All signs are pointing to a possible reversal starting to unfold in overall indices. Okay, I wanted to point that out. Enjoy the rest of your day.